happening here? Are we live? The stream is live. That's awesome. What is going on, everybody? We are live. Yes, and I'm live on my own YouTube, which is cool. This is my first time getting on YouTube. My own YouTube, obviously. It's just a pretty exciting moment here. I think comments from both YouTubes. I don't know what is what, but it is awesome to be here. It is awesome to see you all. I can't physically see you, obviously, but I can feel you and appreciate you and all that stuff. You know, I can do a lot of that stuff. Yeah, we're pretty much ready to go. Yeah, we are pretty much ready to go. It is a pretty, I mean, I say it every time, and it's always a crazy time in the market, you know, like this, we call it the yo-yo, you know, the biggest yo-yo that was ever invented, which was, you know, pretty crazy yo-yo we have here. And I got a lot of stuff that I'm going to kind of cover today. I got even a piece of a book that we're going to read together towards the end that I'm really excited about. I've been reading this book now it's my second time reading it, but it's like the best book on trading and trading psychology. And there's a scene from the book that I was reading yesterday that just like really resonates with what we're building here and what we're doing. And I was like, oh, I have to read this tomorrow on the live. I have to do it, you know, and we're gonna do it. I got one more slide and then I'm done here. It's I always try to get some really good information together for you all. You know how it is. You know how we do it. I hope I have some of my Instagram peeps here, some new faces. I know it's pretty new here. I'm not always publicly streaming and stuff. But, you know, New Year's resolutions are around the corner, and better to get started now than never, right? But all right, let's do this. Hopefully my audio works too, because I got some video that I got a video that I want to play as well. I hope everything works. Yeah, make sure to give me a follow. I'll do my best at posting things. You know how it goes. Hey, thank you for putting that in. Yeah, the name that I kind of have set on is the Higher Thread, because I don't want to just be like a crypto channel. I want to kind of expand into other, you know, conversations, topics, things of that nature. Because I don't want to just like limit myself. At the same time, I'm super passionate about finance, so hopefully we get into some pretty good stuff. Where the heck did oh, there it is. All right, cool. So hopefully we don't have any streaming issues. Hopefully we don't have any streaming issues. I know that my computer just gets super overloaded, probably because I have some really awesome information in there. And yeah. So let's see what's up. Yeah, we don't need this page.
Hey, your audio cut out. No, sir, not yet. Nope.
Can you hear me if I unmute myself?
Hey, there we go. Yep.
Awesome. Yeah, you guys let me know if that happens again. Okay. Well, let's get into it. I got a really good one lined up today. All right. Can you see my screen? Probably not yet because I can't see it on here. Where's my screen? I gotta put it on. Yeah, let's put it on here. Awesome. Market Monday, November 24th. It is Thanksgiving week. I am so thankful and grateful for everybody that shows up here on a weekly basis. Y'all know we put a lot of work in on these updates that we do, and it just means the world to me that I still have your attention to this day. You know, especially the OGs here like Solly, like Raymond, like Gia, like Jalen. I see some new names in here. Trying S for charity. Really good to have you. Zen's Mind. Seen that name around. King Royale. We got Martha Johnson. She's the double, triple, quadruple OG. We got Sherry Cox. We got Alexa. We got some awesome people. We got the Crypto Gardener tuning in all the way from Alaska. We got people watching us in Alaska. Can you believe it? Can you believe it? We got people everywhere, huh? We got people everywhere. Martha is the OG. Sweet, sweet, sweet. Let's kick it off. All right. So obviously right now we're in a pretty nasty pullback on Bitcoin, right? And here I have a chart. All right. This is a logarithmic chart too. So when you really zoom out and you look at the grand scheme of things, I mean, there's doesn't look like a lot. You know, it's just like, oh, all right, it's 2 red months. You know, we've seen it before. We've seen it before. We've definitely seen more red months. Could we have more red months ahead? Probably, probably not. I don't know. I'm not an oracle. My name isn't Jesus, you know. 3 red candles. So again, it's a pretty bloody time. We're right now experiencing one of the biggest pullbacks. I didn't even do top to bottom. Top to bottom is actually like 38%. It's the worst sell-off that we've seen during the start of the bull market for Bitcoin here in like 2023, if you just say that was the start. It's the worst pullback we've seen all cycle. Okay, it's been really, really, really tough and challenging. And you know, we kind of covered this on the Saturday school I did this past week, but just to review it again, you know, it's a tough time. But since then, we're bouncing up pretty hard, right? Like you can't really see it that much, but the bottom of this wick is about 80,000. Where we're at is about 88,000. So it's a pretty big jump that Bitcoin is having. This is the Crypto Fear and Greed Index. You can see that we've hit also, well, this isn't all the way zoomed out, but this is one of the lowest levels of fear that we've hit this cycle as well. One of the lowest levels. And we're still kind of there in this extreme fear in the market, you know, but since we've had a pretty nice bounce, usually is typical when the market is so fearful and people get too scared, they tend to do what's called capitulating, which is they dump their bags at the lows of the market. And you don't really want to do that, right? You want to be on the right side of the market, but you don't want to overreact and you don't want to get into these extremes. And we're going to talk about some extremes throughout this presentation, but extremes are what really drive the market. Right, it's everybody getting way too excited all the way up here about Bitcoin. You can see we're in greedy territory now. Everybody gets overly excited, and when the herd leans one way, usually the market goes the opposite way, right? And that's kind of the effect of what we've seen. And now it might be going to the other extreme where everybody's getting bearish. Everybody's telling you a bear market has started, and we don't really know if that is true or not. Obviously, it's easy to look at hindsight. It's easy to look at the past and come on screen, and like call out what's already happened, you know. So it's that, you know, but we are experiencing some negative momentum. I'll say that right now is definitely not a bullish time in the market by any means. Have we bottomed? We might have. Could we go lower? We also might. You know, I see both sides of the fence here, but the beauty is the way that we're automating our portfolios in certain ways, right? We're right now in cash. We're out of the market, and we were out of the market at 112,000. You know, so I don't really care. Bring lower prices to me. You know, I feel good. I have a cash position. Do I have as much as I want? No, I don't. But times like these really make me grateful, because it's the week of gratitude, really make me grateful for what we've built here, and it really shines during times of crisis and chaos. And that's the uncertainty inside of this market that we're all wrestling with, right? This is some FUD that's been happening, all right? So you have the biggest bank in the world, or one of them, JP Morgan, who has been putting out what you call fear, uncertainty, and doubt over strategy, okay? Because strategy is trying to become the Bitcoin bank of the future. And yeah, so you can see here, word on the street is that JP Morgan is holding a massive short position against MicroStrategy's MSTR. That's why they're allegedly pushing FUD on both Bitcoin and strategy, aiming to profit hundreds of millions if the stock collapses. All right, you can see that there's some propaganda, some talk in the town going on that boycott JP Morgan, close your account, move your money, tell your friends, don't bank with institutions that protected predators, whatever, right? This is sensational. But the thing is, and this is the reality, right? And I actually forgot to include this in my slides. Let me see if I can bring it up real quick. JP Morgan. Yep. And then let's go to all right, let me just I forgot to include both of these things in the slides here, but I'll show you what I'm talking about. So again, pay attention. These are banks that offer investment products. Okay, and check this out right here. So this is JP Morgan's. This is their high yield fund class A shares. This is basically an investment vehicle that they have. You can see it's currently got $500 million in it, 531 million, and it yields about 6.6% per year. Okay, this is a yielding investment. It's not meant to fluctuate like crazy. You can see here it's gone from a value of $7 to $6.50, right? Like, these yielding products are just there to give you fixed income, right? And in the market, in the world of investing, fixed income is a high asset class, right? Like, it's actually the biggest asset class in the world, because that's what bonds are. That's what debt instruments are. They pay you interest. They pay you yield on your money. You loan capital to somebody, right? You can see this was established in November 13, 1998. And this is a pretty good high yielding product that's out there right now, yielding about 6.67% per year. Okay, that's pretty impressive, to say the least, right? But you can see, I mean, its value since December 31st, 1999, it has dropped, right? But if you're paying 6% per year, I think most people maybe got away with an all right return. And then on the other side, you have the largest asset manager, BlackRock, okay, who also has the iShares High Yield Active ETF, ticker symbol BRHY. And let's see if we could see how much this one is paying per year. Where is the yield? I'm looking for the yield. Okay, right here, 12-month trailing yield, about 7.07%. This is a very high yield product. Can we see how much they have in assets for this one? I'm not sure. Can I see how much you have in market cap? I just want to see how big it is. Net assets of fund, 86. I think this is in millions, so this is probably 86 billion if I'm not mistaken. But let's see, BRHY, BlackRock high yield. Market cap, they don't give me market cap. If I do assets, let's see what's in those assets. Okay, so 80 million USD. It's not like the largest thing, but this is their high yield product, right? And usually these high yield products, you can see, seeks to maximize total return, consistent with income generation and prudent investment management, primarily by investing in non-investment grade, high yield or junk bonds with maturities of 10 years or less. So they go out, you can see 82% domestic bonds, 12% foreign bonds, US stocks, and usually they have negative cash because maybe they go and do some sort of yield strategy like borrowing money. And yeah, so you have two of the biggest asset managers that offer these high yield income products, right? And this is kind of a conspiracy. I was listening to a podcast earlier. There's a little bit of a conspiracy here. Gosh darn it. I wish there was like an auto share so like when it boots me off, I can just like go in there and it just reshares my screen for me. I hope you guys don't mind. It's pretty annoying. I have a billion things going on my computer, screenshots and crazy things. Thank you for that. So yeah, thanks Jay-Z for that positivity and that good attitude. But yeah, so check it out. JP Morgan accused of manufacturing the October 10th crash using the 42-day-old document. This was on the MSCI document warning of MicroStrategy delisting risks, triggering $19 billion in liquidations. So, JP Morgan has been kind of spreading this FUD on MicroStrategy or strategy, whatever you want to call it. I hate it because we have strategies and then I have to say MicroStrategy and then correct myself and say strategy. And then by the time I've said strategy so many times, it's like, I don't know, I just say it a lot. But check this out. MSTR to be removed from the index. JP Morgan research report caught in the crossfire. Crypto community slams JP Morgan as MSTR faces 2.8 billion outflow risk. Bitcoiners boycott JP Morgan after $8.8 billion warning against strategy. JP Morgan rumored to short MicroStrategy, igniting crypto frenzy. Also, if you remember around July 10th or in July, Strategy came out with all these crazy products. Okay, they came out with all of these crazy yielding products that were backed by Bitcoin. It was basically like, they lend you money, they take that money to buy Bitcoin with it, or they have these, they sell you shares of the stock and there's no liquidation risk because if they default, you can just get more stock that you can dump. I mean, it's just like these crazy, I don't even understand these products like on a massive scale, but you can see here, this is Strategy's website. So they have their MSTR stock, which has just been completely in the dumpster. You can see the 1 year return is down 58%. Lifetime, they're up about 1,300%. I don't know if this is lifetime or what BSC stands for. But yeah, so their stock is getting completely, absolutely crushed right now. But then they also, in July of this year, they released these products like Stride, like Strike, like Strife, or Stretch and Strife. And they're basically all different debt instruments that give investors fixed income. One of them, I think Strike or Stride, I don't remember which one of these. It's actually pretty cool. It's like if you buy it and you get paid a dividend against it, it's like you lent somebody money and then they're paying you the principal back. So that yield that you're actually getting is tax free. It's interesting. I saw it on like a reel that popped up. But look at this. Look at what they're paying on their high yield products. All right. There's a section here. Dividend 10%. Right. They're paying 10% per year on Stride. On Strike, they're paying 8%, which is still higher than BlackRock and JP Morgan. On Strife, they're paying 10%. On Stretch, they're paying 10.8% or 10.5%. Right. So they have these like crazy yields that they're paying. And right around the time that they dropped all of these high yield products, what happened was some investment grade research arm thingamabob raised the margin requirements for you to hold strategy in your stock portfolio. So they made it harder for people to hold strategy stock. And that was all the way back in July. And now you're seeing, articles like this come out, like JP Morgan is fudding, strategy. And remember, JP Morgan and BlackRock and the other banks, probably all friends, right? And there's probably a level of, a threat that they feel from Bitcoin, from blockchain, and some way, shape, or form. And then you have somebody like Michael Saylor, who's been accumulating Bitcoin for the last 5 years in such massive quantities that he's basically like a lord when it comes to Bitcoin, you know, and he's been able to launch all these crazy products here because they just have so much Bitcoin, right? They had very little debt as well. Like they were using their own cash flows, they were selling stock, right? So they have a very interesting strategy where like they basically what they do is you can see this is their Bitcoin holdings, right? And you can see that their yield in 2024 on Bitcoin was 74%. Their yield this year is 27%. So what does that mean? It means that if you're a holder of strategy stock, Michael Saylor was able to increase the amount of Bitcoin that backs your stock by 27%. And the year before that, he was able to increase the amount of Bitcoin that you held for your MicroStrategy stock by 74%. So it was like you could hold strategy stock, and then the amount of Bitcoin that backs it just keeps increasing because Michael Saylor goes out and keeps buying more Bitcoin. And he's not afraid to sell his own stock to dilute it all, right? So that he can use that money and buy more Bitcoin, because at the end of the day, now you all hold more Bitcoin, right? And it's a long-term strategy, not like this strategy where my screen stops sharing. That's a short-term FUD strategy. This is JP Morgan now trying to FUD this presentation. You see, I said their name and they started FUDding it again. Now we're back, hopefully for good this time. But yeah, so it was very genius. I mean, Michael Saylor kind of pioneered the idea of a digital asset treasury, a DAT as what we call them. But if you think in conspiracy in some ways, right? When you've got this person launching, look at this. This is 1.3 billion, 800 million, 1 billion, 2.8 billion dollars of market cap. Combine all of that, that smokes what JP Morgan is offering, what BlackRock is offering. Now, it's probably not their only yielding products, but these are asset managers, and you have somebody like MicroStrategy coming for their business, right? Because why would you want to earn 6% with JP Morgan when you can earn 10% with Michael Saylor, and the thing that backs his yields is the Bitcoin that he's holding? Now, could that all kind of backfire and work against him? Probably. Maybe that's the reason for the next crazy bear market. But remember, in 2020, when he started his strategy, to 2022, when we had the bear market, Bitcoin had like an 80% drawdown, and Saylor was still not liquidated, right? And I don't think he's gonna get too degenerate with his strategy here. And his stock, I mean, look at his year-to-date performance. His 3-month performance is 50%. He's down 50%. His 1-year performance is down 58%, right? Bitcoin in the last year, I don't know. Where's Bitcoin at in the last year? Let's see. I don't have that on my chart. But I think Bitcoin was already kind of pumping. But you can see in 1 year, Bitcoin is down 8%, while strategy is down 50-something%. Actually, I have an idea here. Well, no. Let's just try this. Okay. Strategy is down in the last year 58%. Okay, so everybody piled into MicroStrategy. Everybody got way too excited, and they fell on their face because they thought that by holding strategy stock, they were going to outperform Bitcoin. And sadly, they haven't. Right? Sadly, they haven't. Right now, it's a bloodbath. Everything in the market is down, beaten down bad, down bad, beaten down bad. All right. But yeah, so I wanted to play this video too. Okay, so let's see. I can watch this video. Hopefully, tell me if the sound works. I wonder if my sound works here. Hold on, it's got to load. I don't know if my sound is going to work or is not going to work. Can you guys hear that? Did you hear that a little bit?
No, I did not.
Can you hear this? How do
It's
I
very
share
faint.
how do I share my screen so that my audio also shares? Some screens let you share audio. Look for share audio checkbox on the next window. Follow these steps to share a video with audio. All right. There we go. I got it now. I think you guys should be able to hear this now. Can you guys hear
On
this?
September 12th, Jamie
Yes, sir.
Dimon says Bitcoin is a fraud. He says he'll fire any one of his traders buying Bitcoin. Bitcoin drops 24%. When Jamie Dimon speaks, people listen. People listen. So that weekend, we found out that the largest buyer of a Bitcoin fund that's in Europe that buys physical Bitcoin, right? The largest buyer was Morgan Stanley and JP Morgan. And that's not illegal. He says it's a fraud. He says you fire anyone that buys it. Yes.
And at the same time, his company is buying it.
His company is buying it.
It's just, I mean, so unethical.
Crazy, huh? You say something, the market listens, down 20%, and then he goes behind everybody's back and buys a bunch of Bitcoin, right? Like, remember, do what they do, not what they say, okay? Do what they do, not what they say. And obviously, they try to engineer some sort of crash so that, well, his their friend Michael Saylor maybe got shooken up a little bit, right? And who knows? Maybe they're going to try to take it down lower, right? Maybe I don't know, but I think it's going to be really hard to crack Michael Saylor, and I don't think they're going to have all the ammunition to be able to do it, you know. But let's see what happens. So yeah, that's that. All right. Now here's some other crazy stuff going on. All right. So you can see the percent below all-time highs right now. There's a lot of blood on these streets. There, you know, Apple is down 2%. Boo-hoo, that's nothing. Right? Google is down 2%. The S&P 500 is down 5%. Gold is down 7%. Amazon is down 15%. Microsoft is down 15%. Nvidia is down 16%. Tesla is down 20%. Facebook is down 25%. Palantir is down 26%. Bitcoin is down 33%. Ethereum is down 45% from its highs. Coinbase is down 46% from its highs. Dogecoin, MicroStrategy is down 69% from its highs. This is the high that it made in this is the high that it made last year. Gosh darn it. Come on, screen, your stupid screen. Let's see if my window shares better than all this other stuff. Let's see if this remains intact better than the what's been going on. Look at this. Trump coin down 92%. Fart coin down 93%. Melania is down 99%. Okay, so it's been a bloodbath in the market. It has been an absolute bloodbath in the market. And because I know we have some XRP fans, you know, XRP right now is down 38% from the all-time high it just made 4 months ago. It is not good for any investor on the streets right now, but I think we have some light at the end of the tunnel. The core macro thesis are still intact: AI, reindustrialization, and energy. Okay, the irony is that the underlying story powering the market has not broken at all. Okay, last week, Nvidia, Dycom Industries, and Powell Industries all reported strong results. Last year, we had Nvidia earnings, and Nvidia smashed it out the park. They beat earnings. They said they're expecting even more revenue. They are all fully sold out of chips. Okay, Nvidia, you cannot buy a Nvidia chip right now. You have to get on a waiting list. And there has just been so much demand for what Nvidia has. Their earnings are growing. And arguably, it's a $5 trillion company. But it seems like if they remain on the trend that they're on, that is completely reasonable, especially with the amount of AI that's going to be built out. These companies sit directly at the cross currents of the same forces that have driven this bull market for 2 years. Massive AI build out. We talk about it every week. People keep spending, people keep building. There are data centers being built in the US right now. There are data centers being built around the world. It is a new industrial revolution that we're going through. Reindustrialization, infrastructure upgrades, surging demand for power generation and grid capacity. Enormous data centers are being built everywhere. Of the 4 core themes I laid out over the summer, reindustrialization, embodied AI, energy, and crypto, the first 3 are very much alive. Notice he said the first 3. Crypto is the only one that looks structurally broken for now. Its last major catalyst was the re-election of crypto-friendly President Trump last year, and it hasn't found a new spark since. Yeah, it's been tough for crypto investors. It's been tough for crypto investors here, okay? But it hasn't been all that tough for us. Look at Goldman. As the panic index nears record highs, chase for downside protection is off the charts. What is downside protection? Downside protection is what asset managers do. So instead of selling their stock, they buy protection against it. You can think of this as insurance. And part of that insurance is something called a option. And it's the option to sell that stock at a certain price. And that's called a put. Okay, they put an option in the market so that they can at least secure a level where they can sell that stock and they can exercise it or not. But this is the put to call skew on the NASDAQ. And you can see that there's these crazy spikes that it goes through. Okay, there was, I can't really tell you what these dates are. This is January 1st, right? This is July 1st. I'm assuming this is somewhere around April, okay, which is in between January and July. It's probably somewhere around April. Market bottomed around then. Okay. And this was, again, periods in between. And you can see this right here. This is recently. We had our put to call skew dramatically spike. A lot of hedge fund managers are short the market or at least trying to hedge themselves out. So it's pretty crazy. But usually I think that this marks the bottom of the market as opposed to the top of the market, okay? Botanical says, what effect will the stimulus checks have on the markets? I don't know, but the stimulus checks are long away. They're probably not going to get hit until like summer of next year, so we'll have to worry about it then. Right now, there's no stimulus checks coming soon. Yeah, I'm not going to count on a stimmy. I want to see it first. But look at this. This is the option volume. And you can see that option volume is just through the roof. Pretty freaking crazy. All right. Pretty crazy right now. We had a lot of shorts last week. We had a lot of CTAs selling, which is like your retail hedge funds. And yeah, and usually when you see everybody go one way, the market ends up doing the opposite. That's what we're kind of seeing this week. Now, I'm not saying that upside is going to continue, but it might. Goldman, December rate cut feels sealed. Okay, another thing that's been going on is are we going to cut? Are we not going to cut? Are we going to cut? Are we not going to cut? You know, all this data is now delayed. There's going to be no more jobs data for this month or next month, and you know they're playing with this data and not giving it to us. So right now, the most important piece of data that's going to come out is that Federal Reserve Beige Book that we talked about last week. This is going to be like a synopsis of the sentiment in the economy that they kind of gauge. And this comes out before every FOMC, I think. And that's going to be like the best gauge as to what they might do. But now we're at 80% chance of a rate cut. This is good. That's why the market is starting to price that in. That's why the market is moving higher because we went from pricing in that we're not going to cut rates to pricing in again that we are going to cut rates. So this is going to be a pretty crazy time. Oh man, I'm running out of water. Yeah, 80% chance. Look at that. The .com melt up analog. Everybody thinks we're in a bear market. This market's done. You know, pack your bags. We got to go home. I know I just know a lot of people right now that are super bearish that think the bear market has started. Maybe it did start. I don't know. Okay. All I know is I've got a part of my portfolio that's in cash. I've got a part of my portfolio that's short. And I've got, unfortunately, a part of my portfolio that I'm just holding on to cryptos that are not having the best day ever. Okay. But if you look at the analog of the .com boom and bust, okay, we did have this scare that happened. It was called the LTCM blow up. I don't know what it stands for, but it was very similar to what we had in the beginning of the year with Liberation Day, the blow up with all the tariffs. We had a grind up higher, and you can see like for a few months or years, I don't know what this is, but the market did kind of end up going sideways. All right, you can see it like rallied high, and then it just kind of went sideways, and it kind of went into this like grind up, okay, before finally collapsing as it did. And I think these are the days from some sort of a start in the market from a sell-off. We had an AI sell-off sometime a year ago or in 2023. Oh yeah, so 1997 to 2001 and middle of 2023 to the present. So in the middle of 2023, we had a sell-off caused by AI, and we recovered that. We had tariffs. We recovered that. This sell-off that we're having is very small in the grand scheme of things. AI investments have grown sharply across major categories, okay? This is what's pushing the market higher. This is what's pushing the market higher. It's money being spent. It is money flowing in the economy. It is money going to all these crazy data centers that they're building. Semiconductors, hardware enablers, software enablers. You can see we're spending more and more money on that, and we're projected to continue spending money. The market is a discounting mechanism. It looks into the future. It says, well, if so much more money is going to be invested, that means we have to value it at this multiple. Okay? And that trend is not stopping. When this trend stops, then I'll say, okay, maybe the bear market is starting. But how could it start when Amazon, Google, Microsoft, Meta, Oracle are spending record amounts of money? And this is 2026. This hasn't even been done yet. That's just a projection. Well, look, they spent more this year than they did a year ago, than they did a year before that, than they did the year before that, so on and so forth. Money is blowing around like nothing, okay? And check this out. This is actually very interesting. Market bubbles are not all bad. Market bubbles carry a negative reputation because we witness the devastation in the aftermath of their collapse. However, from a broader perspective, market bubbles also carry active value. During the inflation of a bubble, you see excessive optimism, capital flowing rapidly, and valuations detached from fundamentals. This is undoubtedly the case with respect to artificial intelligence as we currently see it. But there's a saying that the market will stay irrational longer than you can stay solvent. And this is where a lot of people go wrong. Still, this environment often gives rise to genuine innovation. As Jeremy Grantham once argued, bubbles are wonderful at generating new technologies. We had the dot-com boom. We had 2008, and I mean, I can't tell you what technologies came out of that, but I know Uber was born around there, and Instagram and Facebook. So high times of innovation. Check this out. Number of days that a technology went from 1 million to 100 million users. Look, Netflix, it took them 3,050 days. Twitter, it took them between 1,000 and 1,500. Same with Spotify, same with Facebook. Instagram, about between 500 and 1,000 days. And look at this, ChatGPT. Almost overnight, they went from 1 million to 100 million users. That is wild, right? This is real stuff, guys. This is, a lot of us are paying right now $20 a month to OpenAI for a subscription to use AI. We're paying for this app that edits videos. We're paying for this. All that's money flowing in the economy, right? And these things are what creates an economy. Why bubbles are only obvious in hindsight. Look at this. And guys, every time these things have happened, I heard the same stuff. Oh, this is the start of the bear market. Oh, did you sell your Bitcoin yet? Oh, you know, look, Russia, Ukraine, Fed hiking rates, right? I think this was real. This was 2022. This was a real bear market, right? This was a real bear market. But after that, we had only pullbacks. AI valuations questioned. Market sells off. AI valuations questioned. AI valuations questioned. Market sells off. We had DeepSeek, which is China's AI that proved that you don't need billions of dollars to create really good technology. Market sell-off. We had tariffs. Market sell-off. Now we have AI valuations are questioned. Being too far ahead of your time is indistinguishable from being wrong. I agree with you. We're in a bubble. I agree with you. It's probably going to end badly one day. Okay. I just don't think that time is now, personally. Now, I don't know what I don't know. I'm just following what we're doing. Check this out. Our outlook is unequivocally constructive, but it would be malpractice not to be on the lookout for risks. Again, we are less concerned with fresh public policy initiatives and more with how prior choices could have unintended consequences. The primary risk to the market is that AI capital expenditure boom fails to deliver a substantial productivity in a timely manner, so that leverage rises faster than output, creating credit concerns that could weigh on markets. The good news is that the starting point is strong. This is where we're at right now. Corporate balance sheets are healthy with cash levels high, leverage is low, and despite the hype, private credit metrics are more consistent with manageable risks than late cycle excess. Okay? This is the private construction of data centers. Billions of dollars being spent on data centers. You can see that. That's going parabolic. I think we're in a bear market when this line goes down, when everybody stops investing. Software investment as a share of intellectual property products. The share of software spending and IP spending continues to trend higher. Look at this. Estimated $2.9 trillion in global capital expenditures on data centers from 2025 to 2028. And this is broken down. Where's that money coming from? 1.4 trillion is covered by hyperscaler cash flows. So by real cash flows that these companies are making, Apple is sitting on hundreds of billions of dollars. Facebook was sitting on hundreds of billions of dollars. Like, they're actually making money, right? It's not like they're going out and just getting a credit line for all this money. Like, they have real revenue they're investing. Now, whether that investment yields a return, we don't know, but they're starting to kind of get a little more into the leverage aspect, and that's what could kind of blow this market up. Look at that, 200 billion in corporate debt issuance. This is real debt. 150 billion in securitized credit issuance. 800 billion of private credit via asset-based financing and debt funding of JVs. 350 billion other capital, primarily PE, venture capital, or sovereign wealth funds. Oh, private equity. Okay, so about half of it is coming from real cash flow, and half of it is coming from debt that they're raising. Okay. Now, time for a story. So this is the part that I'm really excited about. Okay, let's take a quick 10-second water break because I've been using my voice a lot. I'm just gonna pour myself some more water. We're gonna come down. You could read what I have here on the screen. This is the book we're gonna be reading. We're gonna read all of it. I'm just kidding. We're only gonna read a part of it, but I'm excited. All right, let's go. Intermission is done. I hope you drank your water, got some water. The sweet sustenance of life. All right, check it out. We're going to be reading this book called Reminiscences of a Stock Operator. This book was written in 1923 by Edwin Lefebvre. It uses a fictional character, Larry Livingston, that was inspired by the true story of a legendary speculator, a legendary trader called Jesse Livermore. He was like the best trader before or around 1923, like crazy trader, and there was a book written about him. The key aspects of the book is it has a fictionalized biography. Its focus is on trading psychology, which is the most important thing. It has very practical lessons, and it has timeless relevance. Like, it's crazy. When you read this book, you're like, oh my, especially if you're an investor or a trader with experience, you're like, oh my God, like, how is a book that was written now over 100 years ago resonating all the same things I go through with my own psychology? How is the market still operating with all these same dynamics that it was 100 years ago, right? everybody says this time is different, but it's very interesting when you read things like, is it really different, or has the market always been like this? Right? Now we're going to read some parts. So let me catch you up. This is about page 53. And basically you have this character, Larry Livingston, who he's now, up until this point, he's made and lost millions of dollars like 3 times, right? So this is his 3rd time going back to Wall Street, right? He's going back to New York, which is where all the action is for traders, and that's where you're getting the best rates and all that stuff. And so this is his 3rd time going back to get his winnings back, right? And he's a pretty good trader, but he started going through this like experience of like saying, well, I'm right so often on the market, but like, why do I sometimes lose money, or like, why do I sometimes like blow myself completely out, and this is him for his 3rd time back in New York. He's overhearing some traders talk, and we'll read this together. It's about 6 pages, so there's a lot in here. So here we go, page 52. All right, so slow as my progress seems now, I suppose I learned as fast as I possibly could, considering that I was making money on balance. If I had lost oftener, perhaps it might have spurred me to more continuous study. I certainly would have had more mistakes to spot, but I am not sure of the exact value of losing. For if I had lost more, I would have lacked the money to test out the improvements in my methods of trading. Studying my winning plays in Fullerton's office, I discovered that although I often was 100% right on the market, that is, in my diagnosis of conditions and general trends, I was not making as much money as my market rightness entitled me to. Why wasn't I? There was as much to learn from partial victory as from defeat. For instance, I had been bullish from the very start of a bull market, and I had backed my opinion by buying stocks. An advance followed, as I had clearly foreseen. So far, all is well. But what else did I do? Why, I listened to the elder statesmen and curbed my youthful impetuous. I made up my mind to be wise and play carefully, conservatively. Everybody knew that the way to do that was to take profits and buy back your stocks on reactions when the market dips. And that is precisely what I did, and rather what I tried to do. For I often took profits and waited for a reaction that never came. Interesting. And I saw my point profit safe in my conservative pocket. They say you never grow poor taking profits. No, you don't. But neither do you grow rich taking a 4-point profit in a bull market. Where I should have made $20,000, I made $2,000. That was what my conservatism did for me. About the time I discovered what a small percentage of what I should have made I discovered something else. And that is that suckers differ among themselves according to the degree of experience. The tyro knows nothing, and everybody, including himself, knows it. But the next or second grade thinks he knows a great deal and makes others feel that way too. He is the experienced sucker who has studied, not the market itself, but a few remarks about the market made by a still higher grade of suckers. This second grade sucker knows how to keep from losing his money in some of the ways that get the raw beginner. It is this semi-sucker rather than the 100% article who is the real all the year round support for the commission houses. He lasts about 3.5 years on average as compared with a single season from 3 to 30 weeks, which is the usual Wall Street life of a first offender. It is naturally the semi-sucker who is always quoting the famous trading aphorisms and the various rules of the game. He knows all the don'ts that ever fall from the oracular lips of the old stagers, excepting the principal one, which is don't be a sucker. The semi-sucker is the type that thinks he has cut his wisdom teeth because he loves to buy on declines. He waits for them. He measures his bargains by the number of points it has sold off from the top. In big bull markets, the plain unadulterated sucker utterly ignorant of rules and precedents, buys blindly because he hopes blindly. He makes most of the money until one of the healthy reactions takes it away from him at one fell swoop. But the careful Mike Sucker does what I did when I thought I was playing the game intelligently. According to the intelligence of others, I knew I needed to change my bucket shop methods. Okay, so bucket shops back in the day, they were like, you're not actually going to the stock market or the stock exchange floor. Like, people kind of set up these casinos where they would let you gamble stocks and you're betting against the house. They're just taking the opposite trade you are. And most people are suckers that come in these bucket shops. So when somebody like Larry Livingston would come in and win a lot, they would like ban him. And they would say, you can't come here. You're robbing us. Like, we don't want your business. Get out of here. You know, so he had to go to New York where he could deal with real brokers. Where were we? I knew I needed to change my bucket shop methods, and I thought I was solving my problem with any change, particularly one that assayed high gold values according to the experienced traders among the customers. Most, let us call them customers, are alike. You find very few who can truthfully say that Wall Street doesn't owe them money. That means they lost money, so now Wall Street owes them money back, right? And you can only find a few people who don't say that. In Fullerton's, there were the usual crowd, all grades. Well, there was one old chap who was not like the others. To begin with, he was a much older man. Another thing was that he never volunteered advice and never bragged of his winnings. That's the best traders and investors. They don't brag. They don't tell you when they're up. They don't. It's like that wise old saying of like, there's a farmer and his son breaks his leg and people say, oh, how lucky, or like, oh, how unlucky. And he says, maybe. And then the war starts. So his son doesn't get drafted. So they're like, oh, how lucky. And he says, well, maybe. It's interesting. But okay, page 54. Where were we at? He was a great hand for listening very attentively to the others. He did not seem very keen to get tips. That's like when everybody is going around saying, hey, I know that Amazon is going to crash, or, oh, it's the bear market. Oh, these are all the reasons why. Oh, these are all the reasons why this is going to go up. Oh, these are all the reasons why this is going to go down. Tips are just like rumors on the street. We all get it. We actually have more of it today because of the internet. That is, he never asked the talkers what they'd heard or what they know. But when somebody gave him one, he always thanked the tipster very politely. Sometimes he thanked the tipster again when the tip turned out okay. But if it went wrong, he never whined, so that nobody could tell whether he followed it or let it slide by. It was a legend of the office that the old jigger was rich and could swing quite a line, but he wasn't donating much to the firm in the way of commissions, at least not that anyone could see. His name was Partridge, but they nicknamed him Turkey behind his back because he was so thick-chested and had a habit of strutting across the various rooms with the point of his chin resting on his breast. The customers, who were all eager to be shoved and forced into doing things so as to lay the blame for failure on others, used to go to old Partridge and tell him what some friend of an insider had advised them to do in a certain stock. They would tell him what they had not done with the tip, so he would tell them what they ought to do. But whether the tip they had was to buy or sell, the old chap's answer was always the same. This was interesting. The customer would finish the tale of his perplexity and then ask, what do you think I ought to do? Old Turkey would cock his head to one side, contemplate his fellow customer with a fatherly smile, and finally he would say very impressively, you know, it's a bull market. Time and time again, I heard him say, well, this is a bull market, you know, as though he were giving you a priceless talisman wrapped up in $1 million accident insurance policy. And of course, I did not get his meaning. One day, a fellow named Elmer Hardwood rushed into the office, wrote out an order, and gave it to the clerk. Then he rushed over to where Mr. Partridge was listening politely to John Fanning's story of the time he overheard Keene give an order to one of his brokers, and all that John made was a measly 3 points on 100 shares. And of course, the stock had to go up 24 points in 3 days right after John sold out. It was at least the fourth time that John had told him that tale of woe. But old Turkey was smiling as sympathetically as if it were the first time he heard it. Well, Elmer made for the old man and without a word of apology to John Fanning told Turkey, Mr. Partridge, I have just sold my Climax Motors. My people say the market is entitled to a reaction and that I'll be able to buy it back cheaper. So you'd better do likewise, that is, if you still got yours. Elmer looked suspiciously to the man to whom he had given an original tip to buy it. The amateur or gratuitous tipster always thinks he owns the receiver of his tip, body and soul, even before he knows how the tip is going to turn out. Yes, Mr. Hardwood, I still have it, of course, said Turkey gratefully. It was nice of Elmer to think of the old chap. Well, now's the time to take your profit and get in again on the next dip, said Elmer, as if he had just made out the deposit slip for the old man. Failing to perceive enthusiastic gratitude in the beneficiary's face, Elmer went on, I have just sold every share I owned. From his voice and manner, you would have conservatively estimated it at 10,000 shares. But Mr. Partridge shook his head regretfully and whined, No, I can't do that. What? Yelled Elmer. I simply can't, said Mr. Partridge. He was in great trouble. Didn't I give you the tip to buy it? You did, Mr. Hardwood, and I'm very grateful to you. Indeed, I am, sir, but hold on, let me talk. And didn't that stock go up 7 points in 10 days, didn't it? It did, and I am much obliged to you, my dear boy, but I couldn't think of selling that stock. You couldn't? Asked Elmer, beginning to look doubtfully himself. It is a habit with most tip givers to be tip takers. No, I couldn't. Why not? Elmer grew nearer. Why, this is a bull market, the old fellow said, as though he had given a long and detailed explanation. Interesting. All right, there's more. That's all right, said Elmer, looking angry because of his disappointment. I know this is a bull market as well as you do, but you'd better slip them that stock of yours and buy it back on the reaction. You might as well reduce the cost to yourself, right? They want to sell high so they can buy back lower. My dear boy, said old Partridge in great distress, my dear boy, if I sold that stock now, I'd lose my position. And then where would I be, right? He would lose his position if he sold the stock now. Elmer Hardwood threw up his hands and shook his head and walked over to me to get sympathy. Can you beat it? He asked me in a stage whisper. I ask you. I didn't say anything, so he went on. I give him a tip on Climax Motors. He buys 500 shares. He's got 7 points profit, and I advise him to get out and buy him back on the reaction that's overdue even now. And what does he say when I tell him? He says that if he sells, he'll lose his job. What do you know about that? I beg your pardon, Mr. Hardwood. I didn't say I'd lose my job, cut in old Turkey. I said I'd lose my position. And when you are as old as I am, and you've been through as many booms and panics as I have, you know that to lose your position is something nobody can afford. Not even John D. Rockefeller. I hope the stock reacts so that you will be able to repurchase your line at a substantial concession, sir. But I myself can only trade in accordance with the experience of many years. I paid a high price for it, and I don't feel like throwing away a second tuition fee. But I am as much obliged to you as if I had the money in the bank. It's a bull market, you know. It's a bull market, you know. And he strutted away, leaving Elmer dazed. What old Mr. Partridge said did not mean much to me until I began to think of my own numerous failures to make as much money as I ought to when I was right on the general market. The more I studied, the more I realized how wise that old chap was. He had evidently suffered from the same defect in his young days and knew his own human weaknesses. He would not lay himself upon the temptation that experience had taught him was hard to resist, and it always proved expensive to him, as it was to me, right? What they're talking about is when you let go of a position and the market goes higher, right? And you thought you were going to buy back in lower, but the market continued going higher. I think it was a long step forward in my trading education when I realized at last that when old Mr. Partridge kept on telling the old customers, well, you know, this is a bull market, he really meant to tell them that the big money was not in the individual fluctuations, but in the main movements. And that is not in reading the tape. So they used to have a tape that they would listen to the stock prices, and then they would like literally draw it out. but in sizing up the entire market and its trend. And right here, let me say one thing. After spending many years in Wall Street and after making and losing millions of dollars, I want to tell you this. It never was my thinking that made the big money for me. It always was my sitting. Got that? My sitting tight. It is no trick at all to be right on the market. You always find lots of early bulls and bull markets and early bears and bear markets. I've known many men who were right at exactly the right time and began buying or selling stocks when prices were at the very level which would show the greatest profit, and their experience invariably matched mine. That is, they made no real money out of it. Men who can both be right and sit tight are uncommon. I found it one of the hardest things to learn, but it is only after a stock operator has firmly grasped this that he can make big money. It is literally true that millions come easier to a trader after he knows how to trade than hundreds did in the days of his ignorance. The reason is that a man may see straight and clearly and yet become impatient or doubtful when the market takes its time about doing as he figured it must do. That is why so many men in Wall Street who are not at all the sucker class, not even in the third grade, nevertheless lose money. The market does not beat them. They beat themselves because though they have brains that they cannot sit tight. Old Turkey was dead right in doing and saying what he did. He had not only the courage of his convictions, but the intelligent patience to sit tight. Disregarding the big swing and trying to jump in and out was fatal to me. Nobody can catch all the fluctuations. In a bull market, your game is to buy and hold until you believe that the bull market is near its end. To do this, you must study general conditions and not tips or special factors affecting individual stocks. Then get out of all your stocks, get out for keeps, wait until you see, or if you prefer, until you think you see the turn of the market, the beginning of a reversal of general conditions. You have to use your brains and your vision to do this. Otherwise, my advice would be as idiotic as to tell you to buy cheap and sell dear. One of the most helpful things that anybody can learn is to give up trying to catch the last eighth or the first. This is about give up trying to time the top and give up trying to time the bottom of the market. These two are the most expensive eighths in the world. They have cost stock traders in the aggregate enough millions of dollars to build a concrete highway across the continent. Another thing I noticed in studying my plays in Fullerton's office after I began to trade less intelligently was that my initial operations seldom showed me a loss. That naturally made me decide to start big. It gave me confidence in my own judgment before I allowed it to be vitiated by the advice of others or even by my own impatience at times. Without faith in his own judgment, no man can go very far in his game. That is all I have learned, to study general conditions, to take a position and stick to it. I can wait without a twinge of impatience. I can see a setback without being shaken, knowing that it is only temporary. I have been short 100,000 shares and I have seen a big rally coming. I have figured correctly that such a rally as I felt was inevitable and even wholesome would make a difference of $1 million in my paper profits. And I nevertheless had stood pat and seen half my paper profit wiped out without once considering the advisability of covering my shorts to put them out again on the rally. I knew that if I did, I might lose my position and with it the certainty of a big killing. It is the big swing that makes the big money for you. If I learned all this so slowly, it was because I learned by my mistakes, and some time always elapses between making a mistake and realizing it, and more time between realizing it and exactly determining it. But at the same time, I was faring pretty comfortably and was very young, so that I made up in other ways. Most of my winnings were still made in part through my tape reading because the kind of markets we were having lent themselves fairly well to my method. It was not losing either as often or as irritably as in the beginning of my New York experiences. It wasn't anything to be proud of. And when you think that I had been broke 3 times in less than 2 years, and as I told you, being broke is a very efficient educational agency, that's dope. I was not increasing my stake very fast because I lived up to the handle all the time. I did not deprive myself of many of the things that a fellow of my age and tastes would want. I had my own automobile, and I could not see any sense in skimping on living when I was taking it out of the market. The ticker only stopped Sundays and holidays, which was as it should be. Every time I found the reason for a loss, or the why and how of another mistake, I added a brand new don't to my schedule of assets. And the nicest way to capitalize my increasing assets was by not cutting down on my living expenses. Of course, I had some amusing experiences and some that were not so amusing, but if I told you all of them in detail, I'd never finish. As a matter of fact, the only incidents that I remember without special effort are those that taught me something of definite value to me and my trading, something that I added to my store of knowledge in the game and to myself. Okay? But check this out. It's such a good book. I'm loving reading it. It's a great, like, it's not too serious, but like for investors and traders and people that are in this market like we are, it is invaluable. It stands the test of time. This was written over 100 years ago. And you see, like we just read about such a thing that most people get wrong in this market, right? He said, I was right almost 100% of the time on where the market was going, but yet I still didn't make as much as I wanted, right? He sells a stock and then it goes up another 20 points, right? Somebody just got a tip. Hey, we're in a bear market. This company's going to go down. They got a big announcement coming in. I got insider news. So they sell all their stock. They get influenced by the media. They get influenced by all this crazy stuff that's going around on a day-by-day basis where show me the piece of news and I'll show you the story that supports it and I'll show you the story that doesn't support it, right? And people let themselves get manipulated by their own emotions and they try to catch the last eighth or the first eighth of the market. They try to time the exact bottom and they try to time the exact top, which unless you're a professional, probably is not happening, right? And you have this fellow, Partridge or Old Turkey as they called him, right? Who literally, when people asked him for advice, he'd say, well, you know, it's a bull market, right? It's a bull market. And what he was saying was the trend is up, right? You got to be with the trend, right? You got to, if the market is making higher highs and higher lows, you just got to be on the right side of the market. And in between, you got all these people trying to pick the top and time the bottom. And once the stock pumps a little bit, they go in and they take their profit off the table. And then the stock ends up going even higher, right? You have all this emotional, psychological chaos going on in between, right? Where this was the third time he's back in New York. He's made and lost millions of dollars up until that point. And now he got this really big secret. I remember the first time I read this book, this was the part that really stuck out to me, was the story with Partridge. And again, you know, it was, he was scared to sell his position because he was going to lose his position, right? He got in at a good price. He was doing what we do with all our systems. He was letting his winners run, right? And yeah, you could sell here and buy back in a little lower and get a discount, but it's not sustainable over the long course of the time. And the whole thing to get out of this story is how it's so important to be on the right side of the market, how it's so important to not overtrade, right? Because, well, back in the day, we don't really do it nowadays, but some exchanges do. You pay commissions every time you make trades, right? Today we pay with slippage and, hey, it's a free trade, but you bought like 0.5% higher than you were quoted and all this other stuff. So there's different ways they slip in commissions. But every good system doesn't overtrade. Every good system knows when to be in the market and when to be out of the market and not try to time all the in-betweens. And so now I'm going to take you guys, because we started with MicroStrategy, right? I'm going to show you our MicroStrategy strategy before I say strategy a billion times. And we'll see what the definition of staying on the right side of the market is, right? Like, look at this. This is our strategy on MicroStrategy in the last 365 days, okay? This is, out of all of our stock strategies, this is our best performing strategy, okay? And again, I told you I'm going to say strategy enough times that I'm going to turn myself into a strategy, okay? But look at that, up 51% in the last year. Look at this max equity drawdown. What max equity drawdown means is the most amount of losses you would have realized, right? The most amount of losses you would have realized. This isn't your top to bottom. Oh, you rode the stock up and then it went into drawdown. It's not what this is about. It's about the real losses that you would have taken, the real money you would have lost, okay? Not unrealized losses. but 6.58% in the last year, right? Remember, MicroStrategy is down over 60% in the last year, okay? You would have only lost 6.58%. In that same time period, you only took 7 trades. You're like Partridge, right? He's not there every day on the stock floor buying and selling and buying and selling and buying and selling. Sometimes you make more, sometimes you lose more. Sometimes you make more, sometimes you lose more. You get a tip, hey, you're getting fudded out by the big banks or whatever, right? Or at the beginning of the year, everybody is overly excited about MicroStrategy. They think that, well, if Bitcoin's going to go past, if Bitcoin's going to go to 1 million, I might as well just buy strategy now. And there was like all this, euphoria and market euphoria. But the value of being on the right side of the market, knowing of when to be in the market, knowing when to be out of the market, knowing when to get back in, knowing when to get in and cut your loser, right? And just waiting all this crazy stuff out, knowing when to start shorting the market, and you'll take 1, 2 losses or small wins before you get into that really big winner, right? And look at that, right before that, this is how our strategies can flip on the just so quickly. Look, we go from a long trade right here when it looks like the value of strategy is breaking out and it's getting bullish. This is right after October. Bitcoin is making new all-time highs. Hey, that was a good trade setup. But we cut the loser, we make a small loss, and then when the momentum starts to break, now we start attacking on the downside. 1 loser, 2 loser. Or actually, these were like small winners. These are small winners. And then bam, we get into a really profitable short trade. Currently, that short trade is up 37%. And then what's cool is if you're in the stock chats, you know that I'm personally playing this stock called MSTZ. Okay, it's a 2 times inverse MicroStrategy stock. So it basically shorts MicroStrategy at 2 times leverage. I don't know how this is possible, but this is up 100% in profit. MSTR is up only 37% on the short trade. When I allocate these, I do it with about half as much capital as I would use on the original trade because it's, now twice the amount of leverage, so I have to manage my risk. But look at that. That's crazy. We have a position that is 100% into profit now. I took this today, okay? That's 100% into profit while the whole market was bleeding out. And look, I mean, this was up at, I think, 140% or 130% at the absolute lows that MSTR was making, right? But this is so cool that we have things like this. I have something that is telling me when to be in the market, when to be out of the market. I am just as bullish on strategy stock as you are, if you're bullish on strategy stock. But I'm not going to be here blindly buying and having this thing we call faith, right? Faith is reserved for spirit, for God, not for the market, okay? And I catch myself many times praying to the market, please give me higher prices, please. I keep buying the dip and the dip keeps going lower, right? I'm holding to all these trades because I got too greedy. And now it hurts to sell out of it. You know what I'm talking about? If you've been in this market, you know exactly what I'm talking about. Look at that. On the 30th of October, we got a short signal to short strategy at $270. That was right here. This is not hard work. You are not at your computer every day trading. You would have taken 7 trades and every trade needs to be bought and sold. So really you did 14 things in the last year just on this strategy. And you're already up 50%. Do you see the value of what we're doing here? It's insane. This is the MSTR strategy the last 2 years from today. And look at this. This is the value of being on the right side of the market. Okay? Look at that. Long trade, failed. Long trade, failed. Strategy goes lower. There's a breakout. You get in. And guess what? You hold that trade for 2 freaking months. Okay? This is 58 trading days. And the stock market is closed on the weekend. So this is like you're holding this trade for almost 2.5 months, right? all throughout this time, strategy is at all-time highs. Strategy is at all-time highs. That's so funny. With what? Jordan, he's our meme pin, you know, like our king pin, but like meme pin. He's always posting the memes. But look at that. You got to know when to be on the right side of the market, because you don't know when this trend is going to bend, right? And how many traders through these movements are saying, I'm going to get out here so I can buy my strategy stock down lower, right? Or if you're a trader, you're looking at support and resistance. When strategy is here, well, it's at old resistance. It got rejected here, and it's at old resistance from back here, right? So let me sell my strategy stock here so I can buy it back lower. And guess what? The market left you behind. They're like, goodbye, see ya, come again. Market sells off, climbs back up. You're not selling here. You know, you actually here might be looking at this move like, man, I should have sold up here, you know, and look at where price is. This is probably like a 10 or 20%, you know, fall. And then market makes new highs, and then the momentum fades and you get out over here, right? And then what does the market do? Well, it sold off, right? You got to know when to be on the right side of the market. You get into one trade, you get stopped out the next day, you get right back in, you get stopped out for a little less than break even, right? Boom, stopped out, stopped out. Market's going sideways, not a good time for these strategies, right? Chief meme officer, that's what Jordan is in our C-suite. And then bam, you find another awesome trade opportunity. And look at that. Now from here to here, you're taking losses and you're going sideways. And remember what he said. He said that the big money is not made in the fluctuations of the market. The big money is made in the waiting. The waiting to, okay, I'm just going to be here in cash. I'm going to be cool, right? I'm going to be unstressed. I'm going to be unfazed, right? Because all throughout this time, strategy's going up. I got FOMO. I got to get back in. Well, yeah, we have FOMO too. We're going to get into a position. We're going to get out of it, right? You took 4 losing trades all throughout this time that it's going sideways. You know, you're taking small cuts, right before, look at that, from April until basically October of that year. That's about 6 months of you doing nothing but sitting there collecting dust, right? Until you finally find the trade that, again, gives you 166% return. This one took over 3 months. Let's look at it, right? From October all the way until about the new year, sometime in the new year, right? About 60 days or 90 days. And I actually do think they count weekends in here. But yeah, so like, again, when do you know when to sell, right? When do you know when to sell? You ask Partridge, he's going to say, well, it's a bull market, you know, it's a bull market. It was for MicroStrategy. It was for Bitcoin, right? So when do you sell? How long are you going to hold this winner? In this case, you held it for 90 days. And throughout this time, look, here's a dip. You would have wished you sold that. You would have, or this is what your head's telling you. You would have wished you sold that. You would have wished you sold that. You would have wished you sold that. And then finally, when the momentum in the market changes, now you get out, you secure your winner. You got to know when to be on the right side of the market. Now we're looking like we're breaking out again. You get in and you take a very small loss. You sit out all of this crazy downside that we had in April. You get in, you take a very small loss. Then here in April, this is when I started trading the stocks. Bam, you get into a really good trade, up 24% in profit, right? Here, you get into a nice breakout. Every time the market breaks out, it feels good to be in the market. It feels good to be on the right side of the market. 3% profit. Look, and right here, we took some cuts, right? Small loser, small loser, small loser, small loser, until we just recently hit it really good on a short trade. And we're not afraid to short the market. I believe in Bitcoin. I do think it's going to be millions of dollars one day. But if it's going down and I have a way to profit and capitalize off of it and make, as you saw, $3,000 extra I am more than happy to do that. That's the value you get for being a community member in our community. Look at that. In the last 2 years, you have not lost more than 12% of your account. Okay. And you'd be up right now 638%. Look at it. You only took 15 trades in the last 2 years. In the last year, you took about 7. So it's, I guess, roughly about 7 trades per year, right? You're not right on all of them. You're right on 4 out of 6, but the 6 that you do have are going to be those outsized winners or outsized losers that you're winning because you're shorting the market, right? So, hey, BlackRock, hey, JP Morgan, bring that FUD on. It's just helping my short gain more profit right now, right? That's how I'm unbiased in this market. I don't care. I'm here to make money, not make friends, right? I'm not here to marry an investment. I'm not here to be like, oh, yes, Michael Saylor, I'll never bet against you. I'll never bet against your stock, right? Because, hey, the thing could blow up in the next 5 years. That could be an amazing profit opportunity for us. If he's blowing up now and his stock goes to 0, well, there's going to be tons of profit to be made from that, right? Tons of profit. Look at Leo ETH, okay? Our Ethereum strategy. This is from January 1st of 2023, okay? You can see here, up 215%, 216% since then. We don't see the amount of trades. I have it covered up here. But this was about 40-ish trades. Let's see. How many trades was that? Yeah, 49 trades right there. You can see this was our sell signal at the end of October. Okay, this is our sell signal at the end of October. We exit Ethereum at $4,100. Again, I told you I had parts of my portfolio that neglected these signals because I thought I was smarter, or I thought maybe I'll allow myself, you know, and I'm hurting right now, right? Because I have ETH. I have a part of my portfolio that I use to trade these signals. And at this time, I was just like lazy and I didn't feel like it. And I was like, I don't know. I mean, you know, it's October and November is usually, so like I make the same mistakes you all might make too. I'm not perfect. Okay. I have good positions. I have bad positions sometimes. I had a ETH position that I missed this exit price. So I'm like, darn it. Like, you know, I wanted to get back up because I was obsessed about the first and the last eighth that we were reading about. Right? I was like, well, Ethereum's already at 4,000. The algorithm sold at 4,100. Like, I'll wait for ETH to get back up there. And guess what? It doesn't. Right? Look, that's the exit signal right there. ETH slides out. Right? We gave back some of the profits, but look at net. We are going up and to the right. Right? Net Ethereum has just really been sideways in a pretty big range. Right? We're not profitable on all the trades, and we have those select winners that push us to all-time highs, that push us to new highs. We give back some of the profit. We make it back even harder. We make it back even harder, and now we're just in that phase where we've given back some of the profit, but rest assured, I am so happy because we have things that are in cash while the market is uncertain and chaos and in crisis. I don't want to be in a position where I'm holding on to depreciating assets, right? And every time that the market is down like this, it makes me wish I had more allocated to what we're doing. Pretty crazy, huh? Pretty crazy. Our Leo Bitcoin bull run on 11/11 from November 11th, 2021. This is the value of being on the right side of the market. We start this from the very top of crypto, from the very top of Bitcoin. Look at, everybody is so impatient. Everybody wants stimulus. Everybody wants action, right? They want to trade Bitcoin because they want to make millions and hundreds of thousands of dollars. But guess what? Our algorithm doesn't care about your over trading. It bought once here, cut it for a small loss, sits out the entire bear market. The entire bear market. Imagine sitting on your cash for, how long is that? 1, 2, 3, 4, 5, 6, 7, 8 months, getting back into a trade, cutting it right before we had the craziest liquidation in crypto called FTX, and then sitting for another 1, 2, 3, 4-ish months before finally getting back in and knowing when to be on the right side of the market, knowing when to be on the right side of the market, knowing when to be in, knowing when to be out, knowing when to get in and cut your loss for a small loss, knowing when to be in. And guess what? Here, look at this. Look at this trade right here. Let's size it up so it fits the whole screen. And then we're all going to scroll down and see how many months were you holding on to this Bitcoin trade when you have all sorts of FUD from all sorts of banksters. You're holding your trade for 1, 2, 3, 4, 5, 6, 7, 8, 9 months. You're holding your Bitcoin. 9 freaking months. You're like, oh, should I sell here? Should I sell here? It's already what, 2024? Yeah, Bitcoin's making new all-time highs, right? You got to know when to be on the right side of the market. Look at that. We got an exit signal on the 14th of October at 112,000 right here. It's all we have the receipts on Telegram and we have the receipts on the trading view here, right? You're trying to get in long trades all throughout here, right? As Bitcoin is making new all-time highs, you feel good because you have a position, right? You have a position. It's maybe a bull market, so I've got to be on the right side of the market, right? You get out, you get back in because maybe we're starting to break out. You get out, and since then, from 112,000, you have been sitting out this entire bloodbath that we're experiencing in crypto, the worst bloodbath we've ever seen. Well, I don't know about ever, but in a very long time, right? You can see this is from November 11th. From that point, you would have been able to walk away with 244%, and your max equity drawdown is only 10.7%, right? Preservation of capital, maximization of reward, right? Your profit factor, going back this far, and let's see if Bitcoin can sustain its compound annual growth rate of about 50%. For every dollar you lost, you made $3.63, right? And look, you're going to go through long periods of drawdown. That's just normal. You know, that's just normal. The best investors know that drawdown is a normal part of a strategy. It's just about knowing when to be on the right side of the market and taking those gains and compounding them through time, compounding them through the ages. All right. Gemini ETH, being on the right side is everything. Okay, look at that. Now, this was a lot more active, right? I don't have the amount of trades, but this is like, it's got to be at least like 100 trades. And this is going back before, well, this is from just 2024, from before August of 2024. So however much time that is, but you can see ETH for the general is sideways, and this strategy is just crushing it, right? You would have increased your account from about 2,000 to about 4,000 in the same time frame. Right now, you're holding a short trade that's 8.4% into profit. Don't get me wrong, you took some licks right here, right? This was the most amount of short trades that this algorithm has lost in a row since like 2023. But it's all about being on the right side of the market, right? And when you look at the long-term equity, you're doing fine. You're cool. You're chilling. Look, if you took every trade, you'd be up massively right now. You would have caught these beautiful shorts from the tariff debacle. Remember, I don't care about how I feel about Ethereum. I'm just here to make money, right? You make profit from the upside. You know when to protect yourself, and you'll cut that loss. You'll cut that loss if you're wrong, and then you'll know when to flip to go right back to the long side. Now you're attacking on the downside because, hey, they might be right. I don't believe we're going to go into a bear market, but I don't know what I don't know. And to finish this off with our second best stock strategy, which is the IBIT strategy for the Bitcoin ETF. All right. I love Bitcoin. I believe in Bitcoin. I do think that this is one day going to be $1 million asset. I want to take advantage of it inside of my Roth IRA, inside of my Roth IRA. I do that on Webull. And in the last year, this strategy is up 38%. Do you guys know what 38% compounded is? Do you know what 38% compounded is? We're not going to look at how we're positioned across everything just because all our stock strategies except for MSTR are short, and all our crypto strategies except for Gemini, ETH, and I think right now Gemini, Cardano are short. So we're either in cash or short the market. But look at this calculator right here. I really want to show something to you guys. Calculadora. Talk about compound interest, right? Say you have a $10,000 investment, right? Maybe that's what you're going to set aside for these strategies in your Roth IRA. And I just showed you two strategies, one that's up 60%, one that's up 40%, right? Let's be even more conservative. Let's just say a 30% compound annual growth rate, right? You got to keep 30% every year. Where does 10,000 grow in the next 10 years? 1 year, now you got $3,000 of profit, or $3,000 of profit you're going to take into the next year. Here's 2 year. Oh man, you're going to make me do this every time. I need compound calculators and not ones that are in Spanish. Sorry guys, I'm not going to sit here and click 1.3 times whatever number. Compound interest calculator. Well, this might actually be even better. There's one that I really like, but I can't find it here. Let's see. Do I have bookmarks? Whatever. All right, let's say you have a $10,000. Let's say you put $500 of DCA every month because you can max out your yearly contribution. Length of time, say you're 10 years, right? The more zeros or the more years that you add, obviously better for compounding. Estimated interest rate, let's say 30%, which is conservative, but again, it beats some of the best asset managers in the world. Variance, so range of interest rates above or below the rate set above that you desire to see results of. Let's just say a 10% variance. Maybe some years you'll make 20%, other years you'll make 40%. I'm curious to see what that effect has. And the compound frequency, let's just do every month because that's when we're, actually let's just do annually just to make it even less sexy. Because I want to err on the side of conservatism. Let's click calculate. Look at that. The results are in 10 years, you're going to have 393,000. Now say you have another 10 years outside of this that you can compound into retirement. Okay? So instead of 10,000, now you're at 393,000 in your retirement account. Maybe you got 20 years until retirement like Jordan does, like I do. I got 30 years until retirement. I got 40 years, right? Maybe you want to pass some generational wealth onto your kin. What does that look like? Wow, $5.6 million, right? And do you see how this consistency, this time in the market, being on the right side is everything, right? Now, okay, some people here after 20 years, hopefully you have enough health to be happy, living, and strong, or you have family that you can pass down your legacy to, and maybe they continue doing what you taught them to do, which is DCA, max out your contribution, and keep compounding that money. Don't spend all of it on like meme coins and things like Jordan did. Wow. In 30 years, now you have a $77 million estate, right? And you can see how this compounded into more and more leads to crazy, incredible legacy. Now, after 40 years, you and your estate, now I'm not making guarantees here. Obviously, everything comes with risks and unknowns, and past performance doesn't equal future performance. But you've got $1 billion in the bank, right? Now, let's say that the strategies degrade, and now instead of making 40%, they make 20% per year. Well, you still have $500 million, right? And if I do my initial 10,000, at the same, but let's do 40 years. 40 years, calculate that, right? We reached the same $1 billion mark, but let's say whatever, like instead of 50%, you made 30%, right? Well, now your future value, instead of being, wait, what? Oh yeah, because sometimes it can be bigger, sometimes it can be smaller, right? So if you're making 20%, well, you got 58 million, you know, and by year 10, let's see, there's your range. You can see that right there, right? Your variance above. Say we do better than 30%. Well, now you got 700,000. Say we do our 30%. And I showed you two strategies. One is up 50%. The other is up 40% in the last year, right? We got strategies like the Bitcoin strategy. This one's up 240% in the last 4 years. Right? 5 years, no, 4 years. So am I being conservative? Am I being greedy? I don't know. You tell me. Variance below 20% is still a great return. You 20 times your money, 217,000, right? And we make all of this as easy for you as by simply having a Telegram channel that says, hey, get out of NVIDIA at 187. If we get into NVIDIA, know where you're going to cut your loss. Right? MicroStrategy, entry, stop loss, right? This is a short that did not work. This is a short that did not work. Here we have open short, and we're still riding that for some pretty massive profits. I was bullish on Bitcoin at the end of October, but I had a part of my portfolio that exits Bitcoin. $64. What's the price of IBIT today? Ah, there it is. $50. Okay, it's down. It's down pretty bad. See, in the last month, down 20%. I get to buy IBIT back at a discount now, right? Let's go to our strategies here real quick, just because I'm on a roll. I love it. Love being here with y'all. What is this? What is this? TQQQ, Tesla strategy. This is supposed to be NVIDIA. All right. Now, did NVIDIA top out? I don't know.
Hey, Igor, just to let you know, it's showing iShares Bitcoin Trust ETF page now.
Oh, because I still have this same window. But it's cool. I shared the window, and it's still showing. Like, it never stopped showing, which is cool. All right, here's our trading view screen. Look at that. The video was down bad, right? We got out at like 187. Now it's 182. A lot of people think, hey, is the NVIDIA bubble popping? I don't know, but I'm not participating in it, right? So if lower prices come, I don't care. If higher prices come, I don't care, because I know when to be on the right side of the market, right? I know when to be on the right side of the market. We can expand this out, right? Know when to be invested, know when to not be invested. Know when to be invested, know when not to be invested. Know when to take very small losers so that you protect yourself in case this was the start of the next bear market, right? Let's see the last bear market, you know? You got to know when to be on the right side. This is another one of our strategies is going to attack on the short side. So hopefully you can make money while the rest of the market is losing their shirts, right? You're up 24%. Ooh, I see what happened. You're up 24%. And the same time, oh my goodness, are you kidding me? Maybe it's just saying it's almost time to go. It's almost time to go. Can't handle the awesomeness. All right. And the same time that the video is down 20%, right? So knowing when to be on the right side of the market is everything. Tesla, I'm super bullish Tesla. I'm super bullish on robotics, right? We got out of Tesla at 447. Price now is 418. Okay. It's always good to know when to be in the market and when to be out of the market. Okay? This is another one of those strategies that can short the market, and it made money in the bear market of 2022 as well, right? Look at that. You got a profitable short trade here. Here, you're sitting out all of this, right? You're sitting all of that out. So you're happy to be in cash doing nothing while the whole world is bleeding out. And remember, guys, wealth is built in the waiting, not in the fluctuations. Okay? And especially if you guys are day trading or you're seeking action or you're investing on faith. Oh, I hope XRP goes up. And that's all I'm going to invest in. Right? You're doing yourself a disservice. Because if it goes to zero tomorrow, not awesome, right? And trust me, I have all sorts of investments and things that I believe in, but I have diversification in my portfolio. That's what I've learned over time. That's the thing that I need to succeed. I mean, this one's dope because, like, when we have our equity lines here, right? Let me just delete all these drawings real quick. Oh, wait. We need them because we need to know what's going on. So, hide drawings. Yeah, but you guys see what's going on here, right? So here's MSTR. This is the equity lines of all our strategies overlaid, right? So we have our MSTR strategy currently at all-time highs, at peak performance, right? And the same time period that currently, I think this is NVIDIA. No, this is TQQQ. Let me put that over here. TQQQ is taking a little bit of a breather, but it just recently made its all-time high in October, right? Our Tesla strategy is in some drawdown, okay? So the high it made was back here in December, and since then, Tesla also hasn't made a new all-time high, and we've just kind of been in a little bit of a lull, you know? But you have things that are at all-time highs, and you have things that are still sideways, you know? So that's not cool. And then you have this. I think this is NVIDIA. Yeah. Right? So the idea is you have this diversification in your portfolio. And we have the same effect for our Leo strategies, right? Leo Bitcoin bull run out of the market. Leo Bitcoin out of the market. Leo ETH out of the market. Solana, man, Solana hasn't taken a trade since September. It has been completely sitting out all this chaos. And then you got Cardano also out of the market. And on our Gemini strategies, we got Bitcoin out of the market. ETH is short. Solana is out of the market. And Cardano is also short. Okay, so we do have signals for these as well. But yeah, that's about what we have here. There's probably going to be a link somewhere in the description. You know, check us out. You can book a call if you want to talk about some higher level programs, or if you want, we've got our Galaxy, which is just $147 a month, and we have some pretty awesome Black Friday discounts going on. Today we were cooking 46 minutes of pure awesome sauce. No problem. So yeah, guys, would love to see you in the community. We got a lot of good stuff coming up. We got some pretty awesome upgrades that are going to come to our strategies as well when the community that's built these releases it. And by then, it's going to be, everything's going to be more premium, better, more VIP. Probably we're going to raise the cost of entry. So you definitely want to secure your piece of the community now while we're still in the growing phase, right? But yeah, I love it. It's amazing. I gotta let my voice rest. Next week, there's going to be no Market Monday. I'm going to be flying to Portugal because there's going to be an awesome trading convention there. And hopefully I get to meet some traders. And maybe that leads to more vault opportunities in the future, or I'll start trading more. I don't know. But yeah, no Market Monday next week. So that's going to be that. And yeah, thank you, Jason. Thank you, thank you, thank you. Read that book, guys and gals, that Reminiscences of a Stock Operator, and check our website out. Check out Galaxy. It's a pretty awesome experience. And yeah, I've been talking so much, I don't even know what to talk about. But I love you all and see you not next week, but the week after that, okay? But the week after that.